Good afternoon. Welcome to today's Wednesday market review. My name is StockDarts, and we're going to do what we always do on Wednesdays. We're going to go ahead and take a look at the four major market indices. We're going to look at the S&P 500, the Nasdaq Composite, the Dow Jones, and the Russell 2000. Once we finish looking at those, we'll also take a quick look at the U.S. dollar. We'll see how it's affecting oil, gold, silver, and then we'll also take a look at Bitcoin and Ethereum as well, as those have become important trading vehicles for myself and hopefully some of my viewers. If anyone in here has a chart they want me to look at or any kind of question, feel free to type it into the chat. I'll be more than happy to answer it. You can always find me on Twitter under the name StockDarts. You can find these videos under the same name, or you could visit me at patreon.com/StockDarts, where I post weekly blog content including trade ideas, as well as generally just expanding on some of the information we come across during these Wednesday market reviews. Typically what I like to do is analyze what kind of market environment we're in. That way I could tailor my trades to match that. It makes no sense trying to short a strong bull market, just as much as it doesn't make any sense to go ahead and try to buy while the market's correcting. And so it's important that we understand what kind of environment we're in and what kind of trades are working. If you like what you see, like I said, you can follow me on all these things. If you're watching this as a recording and you have a chart you want me to look at, you can always ask me on Twitter. Again, the name @StockDarts, and I'd be more than happy to give you those charts for you. Other than that, let's go ahead and get started. First thing we're going to do is take a look at the S&P 500 through the ETF SPY. And as you can see, we've had a major change in character in the markets over the last couple of weeks. This is something that we discussed a couple of weeks ago. We didn't meet last Wednesday, but the Wednesday before that, we were talking about how the market was at a very important place where any more sideways movement was likely, or even downward movement, was likely going to lead to a big shift, as it was going to make some big changes in the technicals of the chart. And as you can see with the S&P 500, what I was talking about in particular was the breaking of this channel, which had been persistent since the beginning of the holiday season last year. We began breaking out in November and late October of last year, and we had a very strong, very clean channel, and the price action didn't really waver from it for a while. Now, within respect to that channel, there was a lot of periods of consolidation and stair-stepping. As you can see, I outlined a lot of rectangles where we went sideways for a while and corrected, giving the market the opportunity to correct while still maintaining its upward trajectory. However, we reached a point a couple of weeks ago where there was no more room for us to stair-step or trade sideways without breaking that channel. And so it was going to be one of those situations where either we broke out and continued to really push upwards, or we broke outside of the channel. Now, the break of that channel wasn't necessarily going to be a significant top in the overall markets, or at least not in my mind. It was just something that probably was overdue for the S&P 500. And the question at that point was this going to be something where we see an isolated pullback in the S&P 500 and maybe the Nasdaq, but we see some of the other areas like the Dow Jones or IWM recover a bit as we get more of the rotation that's been going on back and forth for a good part of this year. A lot of these consolidation ranges that have taken place on the S&P 500 have taken turns with periods of relative strength in the Dow Jones, or maybe not so much the small caps, but even the small caps getting a little bit of a breath of life after they were close to breaking down. And a major component of trading this year has been recognizing when capital is rotating back and forth between different industries or different sectors. And so the question a couple of weeks ago was this going to lead to a pullback across the board, or was it going to be something that was isolated to the S&P 500? And as we've seen, it's been across the board, although it has had a little bit of a different flavor depending on which breakout we've seen or which breakdown we've seen. The other thing to point out, and we'll see that as we go across the board and look at the Nasdaq and IWM, just losing this channel doesn't necessarily mean that we've hit a major market top. I think more than anything, it just means that we've stalled out, and at this point need to really come back and consolidate and test support a little bit more firmly than what we've done so far this year. So far, each of these consolidation ranges, even though they've spanned maybe a month or two, they've been mostly just temporary consolidations and profit taking, while new hands or new bulls are excited to kind of get in. And I think this is the first time that we have a different kind of shift in market sentiment where we're really going to test the bulls now. And the market kind of fluctuates back and forth between this all the time, where it's looking for sellers or it's looking for buyers. And for the most part in 2021, it's been pushing the envelope upwards, looking to figure out exactly where sellers are, or where the supply will finally outnumber demand. And I think we found that spot. And now the point is, it's going to flip back and it's going to look for buyers and try to figure out exactly where demand is going to outnumber supply. And I don't think we found that number yet, and I think that we have a little bit more downside, but I do think that we're kind of due for a reactionary bounce, and that was kind of my idea when I wrote my post on Monday on patreon.com/stockdarts, was that we've seen enough selling where we're likely due for a reactionary bounce to the upside. I don't expect it to be a strong bounce that pushes us back towards highs. I think it's going to be something like we're seeing right now, where we're starting to make our way back upwards towards these moving averages that are now starting to turn downwards. And I strongly suspect that after another day or two of green candles, as we come up and meet this downward trend line and these moving averages, that we are likely going to be met with even more selling pressure and probably head even further down and test lower support. So, we're going to dive into these charts in a little bit more detail and take a look at the differences between the S&P 500, the Nasdaq, the Dow, and IWM. But for those of you that are in here trying to figure out exactly what's going on, that is going to be the too long didn't read or didn't view part of this, is that we're likely going to head up, test support, and then come back down. And now let's analyze exactly where we could find some major support levels if we do continue to sell off in the next week or two. Also, keep in mind, we have a Fed statement today, and that could actually impact these charts pretty significantly. It could be that the Fed says, well, we're worried about where the market is going right now. We need to be a little bit more lax in raising rates, and we're going to keep it down where it is or whatever. If the market likes it, there is a chance that we do break through this and start to rally again. I suspect that's a very small likelihood, but it is a likelihood. And so, as always, when we have a Fed day, we want to make sure that we watch and see what happens, and that we get a good idea of what the reaction is going to be to that. And a lot of times, now granted, it's been a while since an FOMC statement really moves the envelope, because for the most part it's been the same statement over and over and over, which is basically we're keeping interest rates down, we're not ready to raise them yet. And basically for everybody else, or for all of us, it just means more stimulus, more rallies, right? And so it's probably going to be more of the same, and it's really just a matter of how they say it and how the market reacts to it. So I don't expect anything major coming out of that, but it is something to watch, because those statements do have, at the very least, short-term impact on what the market wants to do. So that being said, like I said, I think that we're probably going to come up, test the 50-day, maybe the 20, but we're likely to find a lot of selling pressure and push back down. Now, I consider this level here at 422 to be a very major level of support. I don't expect that to be broken, at least on the first pass, probably not even the second pass. And so this could end up being the floor of what ends up being a decent broad consolidation range where we trade sideways. Think along the lines of something like this, but a little bit wider and a little bit longer. And I think that might be what we're looking to do here, is maybe over the next month or two, is come back down and maybe retest 422, possibly even kind of shake out some buyers by going a little bit below that and maybe coming down close to the 200 as it comes up to meet price. And then maybe just kind of backtrack and go back and forth and really build up some momentum, have the moving averages kind of crisscross a little bit, and maybe set up for another potential rally to close out the year in another 2 months or so. And so we're reaching the point now where, a lot of times in September and October, cyclically you do get some selling pressure, and it could be that we're starting to see that, and it could just be coincidence, but the way things are shaping up, again, it's looking very similar to what we saw last year, where we started to really shake out a little bit right before the holidays, and then eventually we're able to kind of break out. Now, I don't think that this holiday season we're going to get as strong a move as what we saw last season. As you can see, this is exactly what happened last year, September and October, and as you can see, we kind of had a nice rally going into that, right? And then as we hit September and October, we started to break down. We came down, we tested a key support level, we broke up, failed to break out to new highs, came back down, retested, and then from there, as we headed into the holidays, had a nice little rally. Now, you'll notice this is actually very similar to what we're seeing right now, where we had a nice strong rally, and we've had our first really strong push back down. And now the question is, do we have another push back and test this level around 422? And if so, are we going to get another one of these scenarios that rhymes very closely with what we saw last year? Now, that's, of course, conjecture at this point. We're going to have to see how this plays out. But that is a scenario that might play out that I think is probably the more likely scenario to play out at this time is we come down, we test this level, we maybe try to bounce a bit and then test again, and then maybe from there we have enough new buyers that came in and defended a certain area to go ahead and kind of flip the script and start looking for sellers again. But like I said, that's getting a little bit of ahead of ourselves. On these Wednesday market reviews, I like to basically try to gauge what's going to happen from here to next Wednesday or possibly another Wednesday beyond. We keep our view a little bit short term as far as what, we're going to look at the long term as well, but we want to see really what's going to be the environment from here to next Wednesday, because of course I can always update you next Wednesday if I see anything that changes. And so from here to next Wednesday, what I suspect is going to happen is we're going to come up and we're going to test this area around 442, and then from there we're going to come back down. We're likely to just stall for a second at 433, but there's a very good chance, like I said, we come down and test 422. Now, what happens if we do lose 422? What if the selling pressure really starts to accelerate? And if we do, I consider that to be a pretty big sign of weakness, and that would be a warning to me that it's time to really start to reduce risk, not just with my short-term trades, which I already have done, but even in long-term trades, and maybe look for us to find a bounce maybe around the 200-day moving average or a little bit beyond that. We have another major level here around 397, just below 400. We shouldn't reach that level from here to next Wednesday. If we did, again, that would be a pretty big sell-off and a pretty scary sell-off. That being said, I would consider that to be an even bigger buy the dip opportunity compared to what we're seeing at 423, and I would consider that to be an area that we could consider long-term buys as well. If you're looking at stuff like Amazon, Apple, things of that nature that you're looking to maybe get into, you usually want to get those during long-term or during bigger breakdowns. You want to buy long-term stocks usually at value, and usually you want to buy them on corrections. And as it is, I'm already a little bit tempted with Amazon, but I think that there's room for more downside here, so I'm going to be a little bit patient and wait for that. However, like I said, for the short term, what we're looking at is probably a bounce up to this level and then a drop. Now, one other thing, if the Fed statement is good and we're going to rally, well, we have a major level here. This is going to be the key area to break out. So just like we have a key level to the downside that I think defines where we're going to find support, this area here is what's going to define resistance. And in order for us to get back into rally mode, we need to get above 447 or so. That would put us above this really temporary level where we started to kind of break down. It would get us above the 20-day, the 50-day, and the breakdown from this channel, right? So this is a major spot here where we started to break down. Like I said at the beginning, we reached the point where the market had to go one way or the other, right? It was either going to break down or it was going to continue climbing along the bottom of this channel. That failure point lines up perfectly with this 447 level, and in order for this to be a false breakdown, which at this point it looks like it's not, but in order for this to be a false breakdown, we need to get back above that. And so if you're bullish, or if you want to try to get involved to the bull side right now, you have two choices. One is you wait for strong support, or two, you wait to see us get back above this and to kind of proclaim that we're not in the middle of a choppy range. As it stands right now, we have a clear ceiling above and a clear ceiling below, which means we're in a chop zone, which means trading is going to be difficult. It means trading is going to be erratic. And that means that we typically want to be very cautious about how we trade, make sure that we're not letting the market kind of chop us into oblivion as it just goes back and forth, okay? All right, so let's look at the Nasdaq. With the Nasdaq, we can see a little bit of a different picture, but sort of the same scenario. Now, you'll notice with the Nasdaq that we didn't have a channel that we broke down from, right? We broke down from that channel a long time ago, and I think that this is the perfect exhibit as to why you don't necessarily assume it's a major market top when you lose a channel. As you can see, we had a nice clear channel from the holiday season, and we broke below that, but overall, it just spent more time consolidating sideways, and then we broke out, and then we spent more time. And this was part of that rotation I was discussing earlier, where at this point, tech names were taking a break, while recovery names and energy names were breaking out. And then we kind of flipped the script, and tech names started to break out, while the other names started to kind of back off. And so that was the rotation I was discussing earlier. However, what seems to be the case right now is that all areas of the market are breaking down. However, we to kind of however, when we get to the Dow Jones, you'll see the Dow Jones is perking up a bit, showing that there is some rotation going on here. However, overall, we are kind of pulling back. And what we're seeing here with the Nasdaq is the same breakdown as the S&P 500. We lost the 20-day. We had kind of a gap down. We're below the 50 at the moment, and we are strongly testing this area here. Now, there is potential for us to come up and fill this gap, and just like the S&P 500, we have a pretty key area that we need to get above in order for us to invalidate this breakdown, and that's going to be right above this 373. As you can see, we've got this descending trend line, we've got the bottom of this gap, and we've got, well, basically those two levels. And so what we have here is we need to bounce up, get to this gap, and then break out. The more likely scenario is we come up to this, we fail, we head back down, we test the 50 again, we test the 367, and then we head a little bit further. Now you'll notice there's a lot of room to go down to reach the level that the Nasdaq, that green line that I have for the S&P 500, and it's probably going to coincide with the 200. The Nasdaq has been, relatively speaking, stronger than the S&P 500 over the last couple of weeks, several weeks actually, and so I think more likely than not we're going to find support somewhere in this space, maybe around where we hammered last time back in July, around the 350 zone, and we probably don't come back down and test 343. From here to next Wednesday, just like the S&P 500, I think the most likely scenario is we bounce for another day or two, and then we fail and we come back, and we probably spend more time testing this 360 zone. I think this, the hammer that we formed on Monday, the fact that this was where we shook out last time and then really rallied to break out to new highs, I think that there's a nice pocket of demand here, and I think this is probably the floor that we will see from here to next week. And we probably come back and retest this level and kind of stall out here while we wait to figure out whether we need to go further south or whether that's going to be enough to at least continue chopping sideways. So that's kind of all I want to say for the Nasdaq. I think the analysis is very similar to the S&P 500. If we move to the Dow Jones, we will see a little bit of a, well, I guess it's really about the same. It's a little bit different in that we're a little bit lower. But it's kind of the same deal, right? We got a descending trend line. We've got a gap. And in order for us to, now you'll notice one of the key differences, right, is that we're pretty far away from all-time highs already. The moving averages have already crossed and are already curling downwards. We lost this channel also, which was very important. So I think that this is another key sign that the market is done rallying, at least in the short term. Now again, I want to preface this by saying what I'm discussing right now is the short to intermediate price action. I'm not discussing long-term price action. If we look at the long-term price action, when I say our rally is dead, I'm not talking about the rally that we've been in for years, right? I'm not talking about this massive move that we've had over the last decade or so, where we bottomed out back in 2009 or 2008 and have just been ramping up and just running straight higher. I'm not talking about the end of that, right? I'm talking about the end of this rally that we began in November of last year. And I think that this is another sign that that's done. We broke this channel, which was already kind of suspect to begin with, pretty clearly 2 weeks ago. And we've come back down, and we're at the bottom of what has been a pretty good range, or pretty solid range for the Dow Jones. And very similar to the Nasdaq, I suspect that we've hit a short-term bottom. And I think at this point what we're going to do is come up and test the top of this, or this area here, and then come back down and retest this 336. Now, we're pretty close to the 200-day moving average. If we do shake out below this rectangle, we probably come down and test the 200 and then bounce again. And I think the next significant test for the Dow Jones is going to be very similar to what it's going to be for the S&P and the Nasdaq, which is when we do bounce and fail, likely, and come back down and test the lower support, or the support, are we going to break down below that support and really start to backtrack? or are we going to stabilize and just trade sideways, as the Dow Jones has basically been doing since April, right? If you'll notice, we're in the same, we're basically in the same range that we've been in since April, where we kind of found some support here around 337, and we've been meandering back and forth between about 350 and about 335. And we just come down and retested that level now. We're making our way back up. And the question is, are we going to stall out and come back down and test that level? And when we do, are we going to fall below that, or are we going to continue chopping back and forth? I think it's a little early to tell. But judging by what I'm seeing on the Nasdaq and the S&P 500 that have a little bit more room to the downside, I suspect the Dow Jones is going to break below this level. But that's not something we need to worry about, I think, yet. I think right now we're just worried about what happens as we test this level and what happens when we come back and test a little bit lower. Now, if we go to IWM, and that's going to be the last of the four major market indices, you'll notice this one is a little bit different, right? Now, it's the same story. We've been breaking down. However, you'll notice with today, we're actually up a decent amount. Yesterday we bounced, and we are forming a slightly different pattern, right? You'll notice that we're breaking, or challenging to break above this descending trend line. We had a little bit of a, I don't want to call it a bull flag, but this nice little pattern where we were kind of correcting. And we're actually beginning to emerge from that on the IWM. So a little bit more strength coming in compared to what we're seeing on the other three indices. And the question now becomes, are we seeing rotation, or is this just a matter of the small caps getting a little bit of a bounce just because they sold off more quickly than the S&P 500 and the Nasdaq? This is going to be a key area here for those that are looking for the rotation game rather than all four indices moving down together. Is what's going to happen with IWM from here to the next week. And actually, like I said, I think from here to this afternoon is going to be a key tell, depending on what happens with the Fed, and we'll see what happens. Now, one thing I want to point out, we'll get into oil in a second, but oil is up nicely today, and there is a lot of energy names in the small caps, and this could be a function of a rally across the energy sector. So it's a little early to really tell what's going on, but there is some relative strength popping in on IWM compared to the rest of the market. And we'll see exactly where this comes across and what's going to happen with it. Now, the key levels here are a little bit different, right? Because we don't really have a descending trend line that's going to kind of emerge and push down price action. What we have is the 20-day moving average, and more importantly, this intermediate level right around 225. And this is probably where we bounce to, and then from there we see if we fail, do we hold the 200 and continue to kind of make up some ground, or do we come all the way back down to the 207 area? And I think that that's going to be the key area with IWM. Now, as far as the four major market indices go, I think that the action on the S&P 500 is probably the best gauge as to what's going to happen in the overall markets. However, I am a little bit interested in seeing what IWM does here and whether it starts to outperform or not. And if so, I think that's a good sign, and I think it tells us that more than anything, the markets will enter a more of a sideways chop rather than a further correction to the downside. If IWM kind of reverses here and heads back down to its lows, then I think that probably hints at all the markets heading to lows and possibly forming corrections below their current ranges. So this actually is kind of an important tell for us as to what IWM does in the near future, and whether it tries to change its action. As you can see, it's been range bound for a while now, and has been, relatively speaking, weaker than the other three indices pretty much all year. And so if it starts to behave a little bit stronger than the others, then I think, like I said, it doesn't mean that IWM is going to break out to new highs and pull everything along with it. But I think it probably tells us that there's going to be some rotation going on, which will keep the markets from a full-fledged breakdown. And that at the very least, that should be pretty good. So I think that's the four markets in a nutshell, the four major indices. Like I said, I think that we are likely in for a temporary bounce that will be met with more selling than what demand can accommodate. And at that point, we'll turn around and we'll come back and test some support levels and see exactly where buyers are willing to kind of step in. Let's take a quick look at the U.S. dollar. As you can see, the U.S. dollar has been bouncing up. This is This often happens when the market corrects, a fleet of safety. But it's been something that's been kind of in the works already for a while. Now there is going to be some big fluctuations here with the U.S. dollar when we get whatever the Fed wants to say today. But as you can see, as of right now, the U.S. dollar is doing a good job. It already bottomed down. It's doing a good job of kind of building upon that and starting to establish a new range where this 2480 on the index is kind of the low, and then the top of that range is somewhere above 25. We're at 25 right now, but a little bit more room to the upside before we find stronger resistance on this. And if we look at a couple of these currency crosses, you can see that the euro, now in this case, the up is good for the euro and down is good for the US dollar. So again, you can see the US dollar exerting a lot of pressure on the euro. This was a level we discussed a couple of weeks ago, and it held pretty well. Again, showing that the US dollar has kind of established a foothold here and is kind of done breaking down. Now that being said, we are reaching a point where the euro has some support and the US dollar finds some resistance. So it could be we see a reversal of this, and it kind of comes back up. And we'll see what ends up happening here. We have the US versus the Japanese yen still stuck in a range. It is down towards the bottom of that range. So this, for those of you that are forex traders, this could be a potential long trade. And as far as playing the range goes, it already kind of bounced, but we probably have like a little bit more upside to about 110.6. And then finally we have the US Canadian, and as you can see, there's been some pretty big fluctuations back and forth, and it's starting to establish a range here. And a lot of this, I think, is due to the fluctuations we're seeing in oil. You can see oil is actually in the midst of a nice breakout. We discussed this on Monday, or actually I think last week, about energy names. And they are starting, unfortunately we had a bit of a shakeout here, which kind of hurt some of our long plays on oil names, but it's kind of rebounding and making its way back up. And I think oil looks like it wants to make its way back up to about 75 or so, and see what happens from here to there. So energy is one area that I think is holding up well, and is likely going to maybe not be hit as hard in the markets as what if we do continue to correct across the board, and it's probably one of the areas you want to look at. Finally, we have gold. You can see gold bounced a little bit. Kind of interesting that gold bounced kind of at the same time as the US dollar. Again, I think more than anything, a safety move. Gold will gain some strength when the markets get worried. However, I don't think it's enough for me to move the needle for me on gold and silver. I don't like these charts. I don't think these charts are in good trading areas, and it's still not something that I'm interested in trading. We have had, moving on to Bitcoin and Ethereum, we have had major fluctuations in this space. As you can see, Bitcoin had a pretty strong move down. It began back here in September. We already kind of discussed that, and we knew that there was going to be potential for a further downside. For those of you that were here not last Wednesday, but the Wednesday before, because we didn't meet last Wednesday, but 2 Wednesdays ago, I mentioned that there was probably going to be a bounce, and for those that were looking to reduce risk in the cryptocurrency space, that bounce was going to be something you probably wanted to sell, to scale out a bit and to protect yourself, and that has kind of played out. As you can see, we bounced. It was a pretty weak bounce. We met the moving averages, and we turned around and we headed right back south. This is very similar to what we're seeing in the overall markets right now, where we had a breakdown below a key area. We came up and we're kind of, we're going to bounce, test these areas, and move right back down. For the reference point, basically, we're kind of right here as far as the markets are concerned, where we had a nice rally upwards, and then we had the first real big selling signal, and now we're kind of bouncing. And if we bounce a little bit further up, we're likely to be met with a lot of selling pressure, just like Bitcoin was. It's going to lead to a further move down. Now, as far as what we're seeing with Bitcoin and Ethereum, we have found what is a pretty good area of support, or should be a good area of support, and we were met with pretty strong buying. Yesterday, this area was met with strong buying as well. It doesn't look like it with the way that the candle closed, but there was a pretty good hammer forming for a while before it kind of caved in and came right back down. We have seen a pretty big reversal today. There are a lot of traders that are probably expecting this to be a bottom, and I think that it could be a bottom, but I don't think it's a bottom that's done being tested. we can reappropriate this trend line right now and kind of use it like this. And I personally think that when you have this kind of momentum to the downside, it usually doesn't resolve itself with one test. As you can see, it already kind of had to resolve itself with a second move down, and I think that we are not necessarily done with capitulation. We've had very nice volume spikes. I don't know that they're enough to really shake out all the weak hands. So there's a good chance that we're going to come up, we're going to test all these moving averages, and probably have to come back down and test this 40, maybe even drop again below 40,000 before Bitcoin has really shaken out enough weak hands and gotten stronger money to come in to defend it. So there is potential for downside here. Now, I do think that we found what is probably going to be a short-term bottom, and we're probably going to rally back up into the moving averages. But we're not really out of the woods yet as far as Bitcoin is concerned, and I think it's going to be the same case with Ethereum. And this is going to mirror a lot of what we're seeing in the overall markets, where there's still potential for us to bounce, but there's also potential for us to drop. You can see Ethereum is a very similar picture. Had the big drop, came up, bounced into moving averages, and then failed. And you'll notice we again had that shakeout below the previous support area. Now it's not a major, it's actually more of what was resistance and was supposed to be support. It hasn't been really defended that often. We basically kind of broke above it and never really tested it until now. And so much like Bitcoin, we have this downward trajectory that has just begun on strong volume, and I think it's going to take some time to break that downtrend and to kind of reestablish another trend upwards. And there's a good chance that we bleed right back into this previous range as we come up and bounce and then fail. So not really the best trading time right now. That being said, as you can see, Bitcoin and Ethereum are up. A lot of these cryptocurrencies are still giving us, you can see 15% on Algo, 15% on Matic. There's a lot of double-digit percentages. So these are still good areas for swing trades. You can still get good returns, but you have to understand the environment we're in right now. You have to be very fast about taking profits, because I think that the upside is limited at this point. And I think it's going to be the case whether you're looking to trade the stock market or whether you're looking to trade cryptocurrencies, or even if you're looking to trade Forex. The environment that we're in right now is one where we are in a little bit of a state of flux, and we are in what is a transition stage in the markets. And so if you're trying to swing trade these areas, if you feel like you need to kind of make moves, you want to be pretty proactive about protecting yourself and about taking profit. I don't think that we're in the type of environment where you're letting profits run. I think you're in the type of environment where you are trying to just catch bounces back and forth and take your profits and move on to the next one, and keep yourself insulated from larger breakdowns on any of these equities. All right, and so we kind of ran through this pretty quick today. That's really all I have to go over. If anyone in here has a chart they want me to look at, feel free to type it into the chat, and I'll be more than happy to spend some time on that. If not, we can probably call it a day. While I wait to see if anyone in here has a chart they want me to look at, we'll take a quick look at the Fang stocks. Typically, when the market corrects, this is one area I do like to look at is what are the Fang stocks doing and what can I get from them. You can see Facebook has dropped pretty significantly. I don't know that it's found a major support level yet. It could develop a support level around here, but we don't really have one yet that's really defined. Amazon is always the first one I like to look at. And as you can see, Amazon is kind of close to its 200-day. There is more downside before we get to a major support level, a couple $100 away. And that's probably where I'd like to look at adding some more long-term holdings on it. There's a chance we get to that. If not, then I'll see how we develop around the 200-day. I think Apple still has, it's held up pretty well, and it's only now starting to kind of break down. I think swing trade wise, there is potential for a trade here if it could get back and hold above this 144. But long term scaling in wise, I think that there's a lot more room to the downside before I'd want to enter as a long term holding. Netflix has done actually pretty well. Obviously, for long term holdings, there's nothing to do here. but for short-term swing trades, it's showing relative strength, and I don't like the risk-reward here, but I think it's showing that it might even try to rally as the market struggles. And then we have Google, which is still holding up pretty well, and I don't think is in a great spot for a swing trade or for a long-term trade. Now, it is bouncing here, and there is potential for it to bounce further, but I don't know that I like the risk-reward when you consider the current market condition. And Tesla's in a nice little consolidation range, and it could be setting up for a move. And if we get the market to stabilize, we could get a breakout. But if not, it could start to break down, head further south. So we'll see what happens. We have one more earnings season coming up soon, and that might have an impact on what some of these do. But I think that covers it for today. Those of you that are watching this as a recording, if you have a chart you want me to look at, feel free to type it in. Feel free to message me on Twitter. I'll be more than happy to go ahead and take a look at it for you. Other than that, I hope you guys have a good rest of this week, and we'll meet again next Wednesday.